Hey YouTube, it's your boy Black Market. I wanted to do a quick review of TGT or Target. So I wanted to review my Target trade from last week. Got a return of 51% on that, and I wanted to go over a review on it. So this is this is how the trade broke down. As you can see up here, right now I've got up the 4-hour charts for the Bollinger Bands, and I wanted to walk through my entry and exit points and how I got to that. So you can see on the 4-hour, I was looking at Target on the 4-hour chart. You can see here, definitely in a squeeze, and you know how I like squeezes. So I was looking for that buying accumulation to come in the squeeze, which it did. And so you can see right here is where that buying accumulation came in because we've got those light blue bars. So I bought the April 16th $210 calls right here, and I bought at 7:56 a.m. So that'd be 7:56 a.m. Mountain Time since I'm in Denver. But I bought right here, and this is my entry. The reason why I wanted to get in here is because I like to enter around that midpoint on the Bollinger Band, and you can see it was pretty much a perfect entry where I bought at. And you can also see here, I've got my crosshairs lined up, so you can see where I bought at. If you look up at the VIX, so we'll kind of start at the top left and kind of work our way to the right, and then work our way down to the sector XLY. You can see where I bought when I bought. The VIX was below that mid Bollinger point, so to me that means the VIX has a little bit more or a lot more weakness to the downside. I like to buy calls when that VIX is below that midpoint on the 4-hour, right? So that's a check mark for my trade there. And then you can see the SPY. The SPY was definitely strong at that 5 MA or that black line. So you can see there was some strength just because it was above that mid Bollinger Band. So I consider that strength. And you can see here the Qs, although the Qs was showing signs of weakness, the Qs was above that mid Bollinger Band as well. And to me, that still shows the sign of strength. And then XLY, the consumer discretionary sector was above that mid Bollinger Band, and it was above that 5 MA. So that once again, that showed a sign of strength to me. And Target was in a squeeze. So a couple key points here is Target was in a squeeze. There was buying pressure coming in. Overall, right, the market looked pretty strong, especially since the VIX was still showing a bit of signs of weakness on the 4-hour, right? Now, the reason why I bought the 210 calls was because if we break this down and go to the daily chart on Target, where I bought here, I'm looking at the ATR. So when I bought on the 14th, that ATR was around $4, right? So whenever I buy calls or puts, I want to be able to buy. Let's say that stock makes a ATR move of $4, right? So we've got Target here. Its ATR is $4. I'm just trading that ATR. So if Target was $10, right, I want to buy it the maximum $10 out because I want that stock. If it makes one ATR move, which all I want to trade, if it's making that move, I want to be able to be in the money or slightly out of the money if the stock makes an ATR move. Because if I am, then IV or your implied volatility is going to go up, and those option prices are going to spike in price, right? So, or spike in premium. So I was buying in at 204. If it made an ATR move, one ATR move, it'd be around the 208 price. And based on the account size that I'm trading on in my small account, the 210s fit that percentage of account balance that I wanted to trade in. So that's why I bought around here up to those 210s, up on those 210 calls. So that's kind of a lesson on kind of strike prices where you want to buy at. So if we look at the daily, and another reason why I bought here, if you look at the daily chart, you can see on the 4-hour where I bought in at. So I bought around that 10 MA on the daily, and the market even looks a bit stronger here on the daily because if you're trading whatever time frame you're trading on, at least the way I do it, I always go up one time frame and I look at the market from there, right? Because if the market looks good or bad, that higher time frame usually is going to tell the story for a lower time frame. So I bought in on the 204 here, and you can see, if we look at the VIX still shows weakness because it's below that aqua line, that mid Bollinger Band, and it's showing sign of weakness there. The SPY was right at that 5 MA, and you can see the pink line was pointing up, so that outside Bollinger Band line was still pointing up, so that was showing some signs of strength, and it was kind of just pulling back to that 5 MA, right? It wasn't going below, but it was pulling back there. You can see the Q was looking to do the same thing, and then if we look at our sector was above that 5 MA and really just looking to pull back. So, I caught it. I caught target on a bit of a retracement of the sectors and of the market. So I figured I might I would sit through a little bit of volatility. So now, if we go back to the 4-hour chart, I got in on that midpoint, right on that midpoint on the Bollinger Bands. And once again, like I've said before, what gets you in a trade needs to keep you in the trade, right? If nothing changes about that setup, then stay in the trade. And you can see I got in that midpoint. We had a movement up. We was at 206 overnight. Then that pullback came in, and you can follow along with those crosshairs. So we had that pullback that came in, came down, pulled all the way back to my entry point. And I'm asking myself, and you got to ask yourself too, did anything structurally change about the trade? No, because it closed here. It was still at my entry point. The next 4 hours at 11, it opened back up, moved back up, right, towards that 5 MA. Nothing structurally has changed about the trade because I was going to exit if it got below the midpoint, and never did. Overnight, we had some strength come in, and then it popped the next morning, and I got out around the 208 and a quarter, 208.30 mark for target for 51% gain. And you can see, right, it was in that squeeze here, and then it started to break out on that first candle on the 4-hour chart, and that's where I exited at. So, and I wanted to exit around a full ATR move for target, and that's where I ended up exiting at. So, if you guys have any questions, hit your boy up. Hopefully that did make sense. I wanted to provide some value on when I got in target, when I got out, trading on that mid Bollinger Band and trading squeezes on a 4-hour chart. So if you like the content, like the page, subscribe. You know what to do. Holla at your boy, Black Market. Good luck for this upcoming trading week. Things will be interesting. I think it's definitely going to be a week of patience and just kind of sitting back and observing before you jump in any trades. So anyways, that's all I got for today. Talk with you later.